The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman on this 8th day of April. My pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time. Thank you to the hosts. Great shows earlier on, just right through from 8 o'clock this morning. John Logan, Larry Pesavento always has his own thoughts as well as great interviews. And then, of course, Tommy, and you've got Daryl, and that was great. Hope I can add to this. Now, let's look at what I am at least perceiving at this particular point. I'm showing the E-minis right here. And yesterday we did get that sharp move down. We went to a peak D in the Chapman wave. This is Technical Friday. I'm going to be a little technical. In fact, there's a lot of technical stuff I want to get through in this first part of the show. So let's just go right in. And let me run the numbers. That's even better. We're Dow's up 119 at 17,661. To me, this is about 30 to maybe even 40 points more than the bounce that I was anticipating as part of the match. And I'll talk about the match at the moment, but it's really not the issue at all. It's how does the market respond going into Monday and Tuesday. So we'll talk about that. S&P is up 15 at 2,056. So the S&P is up 0.73%, Dow's up 0.69%, and then you get the comp index up 0.58. So it's the weakest of the three at up 28 at 48.76. The VIX is down $1.20 at 14.96. Remember, under 15, that's buying pressure. Going to 15 says, you got a mix of buying pressure and selling pressure. Going to the 16s, selling pressure starts. Going higher than that, and you see triple-digit down days. All right, so where are we? We're looking at the gold contract. The GLD is down 24 cents at 118.37. But gold is up 230 at 12.39. Silver, when I last looked, silver was up a little bit. It's up 15 cents at 15.31. Crude oil is the trigger, and it started last night. I kept watching it last night. It was moving higher, and look what happened. This is the overnight trading. You won't see anything. You'll just see the red is the USO, and the USO, United States Oil Fund, starts this morning with a huge gap. I haven't got the price of that yet. I've only got the price of the SPY. And it drags, it drags the SPY from the low of 203.09, the close yesterday. It gaps up at the opening to, sorry, that wasn't the close. The close was, what am I doing? On the 7th, sorry. It went lower intraday. This is the 5-minute chart, of course. It went to 203, and then it came back, and it closed at 203.95. Opens today, the SPY opens today at 205.34. So that was 203.95. Opens up over a point higher. And U.S. crude oil, the USO, closes the day yesterday at I can't say right now because I haven't got the number. If I can find the number, there it is. It closes at 9.51 and opens this morning at 9.95. That's a big move. And right now you've got a new leg. There's ABCs at a DS. So what we're looking at 5-minute chart. So now let's go back to the story, and that is that the dollar. Now this is very interesting, because the dollar is just a little bit weak. It's down 18 cents at 94.30. Big deal. But you know what is a big deal? Remember we spoke about this arch formation that I drew in, that lowercase h right there comes sharply down. You go to that A minus because you pull back, and you break under it, and you don't close above 94.58 for the next bar and a half or 2 bars. Very negative. And that says, remember we discussed this particular Chapman wave technique earlier, says you can keep going down. You've got to be careful because your resistance is the 9-period moving average now, and it tried it 3 days ago to try to get it and hold above 94.90. Couldn't do it. Went to 95.07, in fact, and then it pulled back sharply, and it's done that again today. Touched the line and pulled back. It's getting close to some kind of a bounce, so we'll have to watch what happens Monday and Tuesday. Let me get rid of this arch formation that we're looking at in the 120-minute chart just for the moment. I meant to do this while I had it up. Let me just do this one more second, because I always get asked about this and then I forget about it. So the E-mini 120-minute chart, I show my subscribers this every day. I've included for a while now, I've included the weekly. Why? Because it's at this resistance. You've got to keep watching very closely. So what we've got is the E-minis are 14. It's pulling back. And what we're looking at is in the 120-minute chart. Let me just do this for a second. I spoke about the shoulder, head, shoulder. I said it's not one of my favorite patterns because when the neckline breaks, very often it doesn't. It's seldom, in fact, that it just goes for a one-to-one from the head to the shoulders to the downside. It's just very seldom. So I like to say the head and shoulders pattern is great to recognize, but it's very difficult to trade. In fact, it's one of the most recognizable patterns. You'll hear people talking about it all the time. My conclusion has been over the years that there are very few people that trade the head and shoulders pattern very well, and I'll explain why. Because you have to start entering your position on the arch. If you understand the arch, the dreaded H formation, you'll understand that's where you start putting on your positions. That's basically where we were adding to the short side the other day. Now, I had an email from Al who seems to pick the exact top and exact bottom very nicely. Not every time, but a lot of the time. Not sure what Al's technique is, but Al said to me, sent this earlier this morning, because you got to hit the right mouse and get the right computer. It says, are you still short? This is early this morning at, it was 10 to 10. It wasn't so early. Are you still short on the market up on a Friday? If so, I might have to buy your letter. Let me just explain what I'm looking at here. For me, nothing has changed yet. You've gone to a bounce in the 120-minute chart to a 120-minute chart saying peak A, a quick peak B, a quick peak C. Oh, let me just do this again. Yes, a quick peak B, a quick peak C, and then we ran for 4 bars and we've hit a leg D. To me, I'm looking at this and I'm saying, hey, lower highs, lower lows, lower highs, lower lows, lower highs maybe, and now we're going to watch to see what happens. And I'm going to explain this in great detail because today is a very important session all the way around. I said all week I've been saying last week was the most important session for me. This is just the confirmation week, and we'll see it today at 4 o'clock where we close. Before we go on with this, I'm just going to say leg D in the 120-minute chart, peak in the 10-minute chart, peak D. I've already drawn the arch formation. If anyone was looking at this pattern, you would have been able to trigger at least a short position that you know exactly where to cover. And the target would be 2,044 in the E-mini. It's trading at 2047 right now. Hit a recovery high today of 2054.25. So we'll watch this closely. I think that the rally is done. Let's go to Charlie in Framingham. Charlie, how are you?
Hey, Basil. Good to talk to you.
Yes. You're looking at?
UCO. It's oil.
Okay, UCO trading. Oh, very nice. Okay, the UCO is in fact the ProShares Ultra Bloomberg Oil Contract and ETN. And Charlie, if you can hold on, I'll be right back with you in a moment. Is that okay?
You're good. Yep.
Okay.
Absolutely.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow's up 90, S&P's up 11, and I definitely want to go through the scenario that we're looking at here because I have to follow up with yesterday, what we're looking at and why. But I've got Charlie on the phone from Framingham, Massachusetts, one of the towns that's right next to me in Newton, and I wanted to go through the UCO. But Charlie, if you don't mind, can I use the USO because I've already got it fully notated?
Sure. I'll watch it right on the screen.
Okay, so USO, if you can see it, I'm going to just finish this little capital A right there. What we're looking at is this is the first opportunity in quite a while, since the beginning of the year, that the monthly chart shows a little bit of a turnaround in the MACD, and the stochastic has already turned around, and it's off the low of $7.92, and it's trading at $10.09 in the monthly. So it's just the start of something going on, and this is United States Oil Fund. The weekly chart has already made a leg A-, which failed, went back to a lower low. Oh, it wasn't, was that 72? No, it went a little low. It actually went to 767 the week of the 12th, of February. So what did I say, 767? Let me type that in. I don't want to say the wrong number. So now what's happened, it's made another leg up, and it's gone beyond the previous high, which is important. And it went all the way to 11, I think it was 10.80, that's right, on the week of the 18th, and now it's pulled back. One of the chart patterns we look at always is when you've made a peak D and an E, and then it's a very clear peak F, as you did on the 18th, when you come down in just a sharp series of lower lows and an attempt to rally, and then you keep fading, you have to look to the left side to find, I spoke about this yesterday, to find some support. Well, there wasn't any support, but support comes sometimes from overseas. It comes from fundamentals. It comes from a lot of things. Oil is a very complex medium. It tends to trade in long-term moves. It's like the dollar. And when it starts to change the trend, that trend change can be really bumpy. So what we looked at is we've had a high in this Just for the moment, I want to give actual crude oil prices. We've had a high just above 42 and a recent low just below 30. And what does it do? It pulls back, and it pulls back to about a 50% level, which is at 35.24 on the 5th. So the move that we're looking at right now, it's taken this down channel and it's just spiked right through it. I like the action at this particular point. But a lot has to happen for me to become really bullish over crude oil. Bullish meaning I'm talking weeks and maybe even months. So this is just the start. Now I'm going to ask you, do you have a position in the UCO?
Yeah, I do. I actually got it on the 30th of March.
Oh, okay.
So, you know, I was running a loss there for a while, but now, let's see, the price that I got it at was
probably 930 or
956.
956. All right, and it's trading right now at 954. So, if you don't mind, since this is Technical Friday, I'm first going to give the scolding. I do this to myself. I do this all the time. And if you've ever heard it before, you know exactly what I'm going to say. I'm going to say if you're in a position and you were expecting it to go one way and somehow it just doesn't get the memo and it starts off and it goes against you, and there you are, you're sitting out, you know, especially something like this, which is the UCO, which is two times long, or is it three? Yeah. It's two, I think, right?
I think I'm not.
I think the probe is. Someone will tell me in the chat.
Sure. I think it's one time.
Oh, is this the one time? Oh, up 12%, and crude oil is up. Okay, I must check this out. Crude oil. Where did my crude oil go? C.
Usually in Fidelity, it has, if it's two times, it has it in it, the description.
It is two times.
Is it?
No, I'm done. I thought you said, okay.
No,
you see, yes, it must be two times because crude oil is up 6 and you're up 12. Okay. Someone will tell me in the den. UCO two times, correct. Yes, UCO is two times. Now, what I wanted to say is this. When you're trading, this might have been for your position play so that you were prepared to have a little bit of a pullback, but, you know, going from the 950 down to the 770 was there. That's a big percentage. Even though it doesn't look like much on the chart, it can feel that way when it goes against you. So, yeah, this is what I normally say. If you're in a position that goes against you and you're fortunate enough, either because you have the patience, sometimes in my case, it used to be that I was just plain lazy. I just didn't want to get out. I thought, it'll come back. I've got patience. I'll wait. And other times it's your heart starts to beat. You wake up in the middle of the night. Whatever it is, it doesn't matter. The most important thing is if it goes against you and that's not what you planned, you were buying it thinking it was going to the 10.5 to 11.5 area, right?
Yes.
Okay. I immediately say, okay, the moment I get back to even, I want to do one of two things. Now there are tax consequences and all sorts of things, but what I've been doing for a long time now, well, I haven't actually had to do it for a while, but what I used to do when something went like this against me, I would immediately, I'd stop everything and I'd say, you've got to get out of most of your position. I usually say all the position. You've got to sit back for 10, 15, 20 minutes, do your homework. And if you decide then that you like the action and you're looking at it fresh, now the bogeyman just gone away, you're free to think about this chart in a completely different way. You say, you know what, I'm buying it back. You can buy it back within a penny of what you just went out, but you've got a new position. Now you've got your head cleared and you say to yourself, good, now I'm going to make my stop, and you name the stop. You actually put it in because that's your stop. In your case, because it's up very close, you don't have to necessarily put a stop. You don't have to get out, but I would definitely say, you know what, if this UCO pulls back under 920, or you can, I don't want to tell you what number, but I'm just saying 929. In fact, if it starts to look like it's going to give back that same situation, that's where you've got to put a stop, at least on a good chunk of the position. That's number one. Number two is now you're looking at it fresh. Let's just say you've done your homework, you haven't had to get out, you've just done your homework, you've got your stop in. Now you just let the stop do its stuff, because you're looking at the stock and you've done what you should have done the very first time. Now, there are people, I know there are a lot of people, I'm looking at a stock, a Nova Gold. We got out of it. I love the stock. We got out of it. We made a huge profit going from 395 to 4 something. And yes, the stock's flying up in the 5s or whatever it is. But you know what? That's the situation. I have the stops, and I have them for a reason, because I don't like these losses that just sit on your head. So, Charlie, I'm going to recommend, I like the action right now. It says to me, you've raised the base, but the base is lower than the stop I would give you. The base 882 is the 9-period moving average, but the UCO I would make that base right now just somewhere in the gap, somewhere around 910. That's the area. You break $9 on this move in the next 2 days, then I'm saying H pattern, you're going to have to do quite a bit of retesting. If it succeeds and crude oil moves even higher, then what you're looking at is you can use a trailing stop. So here's the position. I like it. It needs to continue higher. It can't stop today. It has to break above 970. That's the high of the 30th. And use a trailing stop. You can just sit down now and just say, here's my stop, and I'm going to be very disciplined. Congratulations for holding all the way through. Charlie, let me know how it goes next week, okay?
You got it. Thank you.
Thank you very much for calling.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So this is for Alan, for a number of people who had asked me the question. So let me just go through this. Why did we do what we did in my opening call, my daily newsletter? And of course, I always say the chart doesn't know. It's like flipping a coin. How does the chart know that it's matching? Of course it doesn't. Only human nature can do that. So back on the 19th of May last year, when you made the all-time high, the Dow made its all-time high at 18,351, there were a series of just sideways bars and then a big sharp bar on the 1, 2, 3, 4. In this case, it was 1, 2, 3 on the fourth session, and then a big white candle, but an inside bar on the fifth session. But the 9-period moving average became severe resistance. The MACD, the moving average convergence divergence, this is the daily chart of the Dow. You see that vertical line? See what happened? The MACD started to turn around and then it crossed negative, but it didn't really widen the histogram, the 0% line. Those bars didn't widen until just later on, like a bar 7 and 8 of this particular pattern from the high. But look what happened to the slow stochastic, and look what happened to the blue line on balance volume. And that is very important. Okay, a couple of things going on here. And then there was this pattern that went sideways with big bounces, lower lows and lower highs. Just kept doing, there was one moment where it's slightly higher high, no, was it? And then from the 18,131 level on the 16th of July, the 42nd bar, kabam, it just went right down to that line and it never looked back. The 200-period moving average, the orange line, became resistance and then it broke down. Yes, that's the first part of the story. Wait a minute. August the 24th, the Dow plummets down, makes its Roman candle at 15,370, and it starts to move to the upside, but it becomes an H pattern that goes to a lowercase m, but it does not break the lower 15,370 as the price moves up and moves up and moves up. And then wait a minute. 50 bars later, it makes a peak F, the sixth highest peak. And you'll see Steve Rhodes has this program. We identify the low, it counts. He likes to do it in numbers or letters. It makes a difference. It's exactly the Chapman wave methodology. The registration has numbers and letters for the trademark, and that's how it is. So now what we're looking at is at the sixth highest peak, that's peak 6, at 17,977 on the 3rd of November, 50 bars later, it starts a move down that goes 1, 2, 3, boom, 4. The fourth day, that's bar 54, it goes down below the 9-period moving average, closes below it, and then the next day has a bit of a rally to halfway and then stops dead at the 9-period moving average. Okay. Then it goes down to the 200-period moving average, and what happens? Right there, under the 200-period moving average, going from 17,977, it drops to 17,210, 760-ish points, and then it rallies back and it thinks, oh man, and then it starts that same pattern. I call it the match, and that match was exactly the same as the price movement that we saw over here. Bam, 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 like a little ping pong ball in a tube, and it makes definitively lower highs and lower lows, until eventually, bam, it breaks down, goes to that August the 24th low. I'm using all these expressions to be very articulate in my thoughts. So now what we've got is from that low, there's a rally that goes all the way back, and it goes to 17,914, 60 points below the previous high. And then it starts a series of low lows and lower highs. And then what happens at 37 bars instead of the 42 that you saw before, it starts to break down. And then it smashes through the support, that pink channel line, and it goes all the way down to the low of 15,450 on the 20th of January. And look what happens. It starts to move to the upside. I circled it, makes the H pattern, successful H. It means if you break that bar, the high of the 1st of February of 16,510 in the Chapman wave methodology, you should be going even higher. And what happens is, it goes higher. It walks the 9-period exponential moving average. We went long right there on the 20th. We went right on the 2nd. We got back in on the 11th of February, and then we got in, and then we got out a little early because I hit a peak D, And then we got short and added to the shorts recently. And at 17,811, the 50th bar of the rally on the 1st of April, and that was a surprise that it even went there, at again a peak F. Look there on the left, 50 bars was peak F. We go right to that letter, and now we start the move down. Inside bar, whoops, it was that bar there, 17,811, right there. So 1, 2, 3. Yesterday was bar 4. Today is bar 5. We need to close under the 9-period exponential moving average of 17,000. I said 17,620 is the level that we don't want to close above today. And we should start seeing a failure. Why am I saying that? Why do I feel that I have at least a little bit of confidence in the move and we've added to the shorts today? We had a whole rigmarole that we went long on the one of the volatility indexes. We took profits, went back in. One of the positions is up huge. Yesterday, that went from the 416 level all the way to $5 and something. Big moves for this, but it's so quick that you can give up, bam, in a second you can give up those gains. So we added back this morning what we took off, a little small position we took off of the position, and we added it back. And the only reason I'm doing this is because I think that the chart pattern doesn't know that it's copying it. I know that it's so far matching it very well. It'll unmatch that if today's high goes above 17,730 in this move right now. That would say to me, oh man, you're wrong. But look at the MACD and stochastic. These are definitively in a downtrend. And that gave me confidence, at least to feel that all our short positions that we've added are working. They're working quite nicely. But it doesn't mean to say you're going to make much money until you really start to see a smash to the downside to test that 200-period moving average of 17,137. Hey, that is some 400 and something points away. I'd even be happy if it got by next Tuesday or so to the 17,750 level to say, I think you're on the right track, mister. Otherwise, you are way off. But so far, I like it. Let's go back to that chart, and we're going to go to our callers because I think I wanted to complete my thinking process. Didn't want that. I wanted this one right here, right there. Just wanted to see if I was correct. Look, there it is. There's the peak D in the Chapman wave. I gave you that trade right there, and it plummeted from the 2049-ish area. Now we're at 2043. As long as this is the methodology that we're using and it's working, that's what I'm talking about. That's why I was saying just a moment ago that Charlie has to get his stops in immediately because crude oil could turn around, and now we've split from at this particular point. Let's go to Ben in Tallahassee. Ben, how are you?
Hey, Basil. Great. How are you?
Good, thank you.
Great. It's on the VIX. You just had a great summary. Can I wait here or?
Oh, please do. If you can wait, okay. That'll be great. And I hope Ken in Kansas City. Ken, I always love speaking with you. In a little while, can you hold on? Because I'd love to speak to you about.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Dow's up 61. It was up way more than double earlier on. S&P was up way more than double as well. It's up 754. Day's young. Anything can happen. I think it was a fake-out move this morning. Just based on what we're doing, I'll be totally wrong. By the end of the day, the market soars back to 17,700. And then I have to say, whoa, that's a little different to what I was expecting. All right, here we go. We're on with Ben in Tallahassee, and particularly you'd like to look at what?
Yeah, hey, Basil. So the other day I called and was asking for a projection on the VIX, the baseline VIX, and you were thinking maybe the 200 EMA on the daily. Is that correct?
Yes. What I'd said was if it can get over, I'm not sure if I say close or get over 1650. I think I talked about it closing because what it needs, what was the high? 1677. That was yesterday. What I wanted was to see a close above 1650, and in fact, it did close at 16. Okay, didn't close. The reason why I wanted to close in the upper part of the 16s is because if it's able to, well, today's Friday, I don't think it can do that today. But what I wanted was to test that 9-period exponential moving average of the weekly chart. If we could see a close, well, the day's young, you never know. If there's if all of a sudden over the weekend, fund managers and certainly hedge fund managers start to say, whoa, you know what? I think it's a time to start buying the volatility index for insurance, and they've not really been buying it lately. This is the thing that's, in one sense, it's really positive because when they do it, they could actually start buying it in the high 16s, 17s. That will take it quickly to 18. But on the other hand, if they're really not interested, they're saying, ho-hum, we think the market's going up. We don't have to bother. So I have to keep that in mind. But let me just be real clear. Right now, the support is at 1487 is the 9-period moving average. I don't even want to see that in the next 2 days. I want to see 1580, and then I want to see 1630s. That's, to me, that would fit the scenario I'm looking at perfectly. That's number one.
Yeah.
Number two.
I'm sorry, go ahead.
Number two is in this cup formation that is just, and you know, the VIX, the VIX is a sentimental, not a sentimental, but a sentiment indicator. And therefore, it doesn't have to follow the normal things of a cup formation because it happens in the moment. And that moment could come when it's in a completely different place. But at the moment, it's making an inverted head and shoulders in the daily. It's making a higher highs and higher lows, just very short term. It's making a confirmed cup formation. The MACD is moving high. If this was a stock, and you called me right now and you said, would you buy it or would you sell it? I said, I'd buy it right here at 1547. I'd have a stop below the 9-period moving average because I don't even want it to get to 1590, well, 1587. That's, and in fact, to 17, so it's about 70 cents. That's way more of a stop than I'd ever have. I'd make a stop even tighter. At 1548, I'd say if it gets to 15.20 anytime today, I'd be out because it's the VIX index. If it was just a stock, I'd say give it a little more room, let it test the 9 EMA. But I don't want to see the VIX go back. I don't want to see the Dow rally at this point. It's only at 52.
Totally agree.
I want to see it just every hour. It has to be making a lower low and a lower high. Then there's going to be 1 hour, maybe between 2 and 3, where it hasn't attempted a rally. And then we'll see the final hour what happens. So here's my answer to you. I'm not going to go to, I'm just glancing at the 120-minute chart. Yeah, I'm going to say to you, the answer to your question is, my target is the $18.19 level of the 200-period moving average. Doesn't mean to say it's going to get there. Obviously, it's going to get there sometime.
I'm sorry, Basil. Actually, the ultimate question is if that target, and I agree with you. I mean, you got to trade these things in the microsecond range. They change so fast. But if you translate that to the TVIX, does that translate to its 200 EMA around $8, or is that crazy?
Let's just have a look. TVIX. It's actually trying to climb above it right now. It's a little different formation. And that's
so you can't look at that as its 200 EMA at $8 for a projection, then, can you?
Oh no, the $11.86 is the 200 EMA. You've got it. We talk about apples and oranges because this is something that gets reconfigured every single day.
Oh, that's true. That's true.
If you're looking at the monthly, it was once upon a time at 100,000. No, 109,107. Gee, I would have liked to have shorted it at 109,000. So this is not the instrument. This is the short. If we had just traded it short term like it's supposed to be every single day, we would have done really well because we've had some fantastic moves to the upside. But I am trying my very best at this moment to try to hold this as a better position, even though it's high risk, for a percentage gain on a very low price stock, treating it like a stock. But normally I wouldn't be doing this. It's just that if the patterns we're looking at are going to confirm, the VIX should break above yesterday's high of 515 by Monday or Tuesday.
And then the projection would be maybe high fives, 6 maybe.
Oh no, I would just do one thing at a time. 568 is the left side high of the 24th of March. I just go one step at a time.
I'm with you. Just these things to trade.
Yeah, you have to with this. This is different.
I agree. Okay, very good. Thank
you, Ben.
Basil.
Great call. Good questions. So, folks, let's go to Ken in Kansas City. Ken, how are you?
I'm very good, Basil. Thanks for taking my call.
My pleasure. We haven't spoken for a while. It's always good to hear from you.
It's good to talk to you, too. I'm looking at Wells Fargo. I'm wondering what you're thinking about for a short term. I'm thinking about taking an option, and I don't do options very often. I'm thinking about doing a put on it for June 17th.
Okay, because I'm looking at this chart, and as you're talking, I'm saying to myself, where would I put in a buy for Wells Fargo, and what is the situation as it is right now? And they're two completely separate questions. The question for the long term is where would I put a buy on Wells Fargo? Well, it's making the H pattern. It's already tested the 4680, I think that is 4697 or so level of the 200-period moving average. It broke it once, tested it successfully once, and it's kind of bounced off it another time, but the 9-period moving average is decidedly negative. The stochastic is negative, the MACD is negative, and the daily is negative. So I'm just going to say the whole XLF situation, that's the financials, JP Morgan, Wells Fargo, I've looked at them all very closely. The way I'm looking at it right now is that I think that it's a pity 2 days ago would have been perfect as it was trying to get to the 9-period moving average. So the put position now would be a little more expensive. But if you're thinking July, I'm going to make 2 suggestions. One is, if you can get, would you be looking?
I'm thinking June 17th.
June the 17th, perfect. If you're thinking June the 17th, I'm going to make 2 suggestions. One is, I would get 2 strikes. I'd have one a little further out where you're trading it almost like a stock, but it's not going 1 for 1, but it is going 1 for 35 cents to 1 to 45 cents. In other words, it'll move down, say a point. If it does, you will only make 45 cents. The other is that you're going to be much more in the money, and you're going to get it as close to 1-to-1 as you can get. So can you hold on, and I'll give you what I would consider the trade?
Sure, thank you.
Great. We'll be back, folks. Back with Ken in Kansas City, and we're looking at the Dow now only up 41. S&P's down up 5. Interesting.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. So this is what I want you to do. 2 things. One is, in the den it was mentioned, Ulta, which is Ultra Cosmetics, is at an all-time high, gapped up on news today. I've got this as G, and I immediately typed into the den. I hope that Jennifer still has her Ulta, if Chef Jennifer from Wellesley. I hope you do. And so that's that. Now we're going to go back to Ken. Ken, the way I'd be looking at it, it's at 47.26. If you could get something like we're looking at the downside. So if you could get something like a 47, but I would even prefer if you could get a 48 put, I know that you're paying much more for it, but if you thought of it as a position that you would like to move with the stock, and the way I'm looking at it, I think it's going to test the 44 low that it made earlier this year in February, I think it was. That's how I'm looking at it. So that's the one. So it's two positions. One is you get as close as you can. You could get the 47.50, be a little bit out the money, and that's going to cost you much less, a little bit more risk. But my thinking is also add to it a position or two that you have the puts that are nicely in the money, and you can get as close to, you won't be 1 for 1. You could get as close at some point, you're going to get close to 88 cents to the dollar if it really starts to move down. That's the way I'm looking at it. And the ideal position would have been in the 40, when it was at 47.60, but 30 cents on an option does make a difference, but not if we're looking at a move of 2 points or more to the downside. It could be more, but this is why I'm thinking right now. Hope that helps you, Ken.
Well, it certainly does. Basil, thanks a lot, and you have a great weekend.
Thank you very much. You too. So, folks, let's do this. We've got just a couple of minutes left here. There are a couple of things that I want you to do. Let me do this. I think it'll make it as clear as I can. I'm going to go to I want to just show you something. There's a divergence going on. You see, here's the IWM. It's up 19 cents, but it is struggling at that 9-period moving average after making a peak E. I have to now, I don't care where it closes today, I have to put in a down arrow because of the action, the actual chart formation. That says sell signal, probably sell mode. So I might be totally wrong, but that's the way I'm looking at it. Sell mode says that it should at least test the low of 105.74 over the coming week or two. All right, it can even bounce a little bit, but it looks like it's going to make lower lows and lower highs. So I wanted to show you that. I wanted to show you also, darn, there was a question. Oh, I wanted to show you the chart, the OIH. Remember we spoke about it yesterday. It's still just making a series of lower highs and lower lows. That's the oil sector. If you look at the USO, that's a little different with the gap. See the gap up here? Now, I don't usually like these gaps, but when you're talking about something that trades overseas as well, you're going to see gaps all over the show. I like two things that are going on here. One is, I like the fact that, let me go to the GDX, that the actual stocks themselves, see, this is a different pattern altogether. That's what I spoke about yesterday, that gold and the GDX is in a different mindset. Look, it's close to going to a leg C in the weekly chart. I don't get that with the GLD. Look at the GLD. The GLD is really struggling here, but it is making, now just on a short-term basis, it's trying to make higher highs and higher lows. MACD is trying to turn. I can just tell you this, that if the dollar, I want you to do this because weekend's coming up, just want you to finish up on practical stuff. The dollar, you see, now is given back. Now, I've got the dollar in an H pattern. I've got the dollar in the monthly, in this double U. That means it's made a cup formation, it's trying for another cup formation, and that should test the low of 92.62. So just to be real clear, I'm suspecting that the market is not going to tumble sharply over the next couple of days, but later in the week, I'm expecting there's a sharper move to the downside. So maybe midweek we start to, now we're just backing and filling a little bit, and we'll see what happens. So lower lows, lower highs in the indices for now. Watch that VIX index. VIX right now is trading at 1544. I want to see a close up in the 1565, 1580 level by the close.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.